Graham Bibby, Chief Investment Officer, joined today with Matt Leone, Portfolio Manager. We'll give you an update on the quarterly performance of markets and our view of things going forward. The environment's been quite interesting with the recession that may have been coming still being put off, but yet we're getting signs of possible soft landing, and I think we're getting a really good read of that through reporting season. So I thought I'd ask you, Matt, what about what's been going on in the US and particularly Australia for the read-through in the economy from companies?
Sure. So I'll start off with the US and really the global reporting season. That's been fairly solid. Companies have been reporting resilient margins, and the theme of the year or the theme of the month, AI, NVIDIA's been fairly strong as well. But interestingly, despite a very strong earnings result and strong guidance as well, NVIDIA's stock didn't actually respond much to that beat. So there are potential signs that that's getting priced in. It's not as great a picture on the domestic earnings side. So domestic earnings season was a little bit disappointing. Results themselves were okay, but guidance was not great, and we're seeing negative revisions to consensus estimates over both FY24 and FY25. The broad reasons for that are wages, interest costs, and capital expenditure being higher than expected for the 2024 guidance. So that's being a drag on margins as well. So overall, global earnings season, pretty solid, pretty resilient, but not as great a picture for domestic companies.
We'll bring it back up to the macroeconomy then. Some observations that I've got is that play-off between a soft landing and a recession that may ultimately happen is quite a trade-off, and we're seeing that being priced as we're seeing through companies. We're also seeing that priced in interest rate markets as well. So we've seen 10-year bonds rise, and the thought that the Reserve Bank and the Federal Reserve aren't going to be cutting rates soon because there's no need to if there's no recession, that may well mean that interest rates will stay high for longer, and perhaps there might even be a hike or two coming out the back end of this. I think we are still positioned for what the risks are that are there, so we still do see that downturn as being a reasonable probability. So I think the strategy in the portfolio, from your point of view, Matt, on how would you see that we're positioned?
Yeah, we're still cautiously positioned, but we're still invested. Obviously, there's a whole range of scenarios out there, and over the last couple of years, that range has been wider than normal. So our positioning reflects that with a bit of caution, but still being invested.
So through to the end of the year, we still could see quite a range of outcomes. And I think our positioning is, as Matt said, to be cautious with that sort of outlook, and really to have a resilient portfolio that's still invested. Thanks very much.
Right, thanks everyone.